Before we dive into the main content, I have a little surprise for those of you who stick with us till the end. We're giving away a premium indicator worth 2 to 96 completely free. This is our way of saying thank you for being part of this journey with us. And more than that, it's a tool that you can actually apply to your live trading setup. So hang tight, stay with us until the end of the video and claim this free gift that could make a real difference in your trading. Hello, hey traders friends, and especially our beloved ninza.co family. I'm beyond excited to be here with all of you for today's special webinar. And guess what? The all-time best-selling product is making its epic return with a fresh new identity. Solar Wave, formerly known as Nova Wind. Now reimagined and ready to help you catch the pulse of the market. But that's not all. We're also bringing back a powerful package, Saber-Tooth Tiger Trading, widely recognized as a proven momentum-based pullback strategy that delivers results where it matters. And here's the part I know you're waiting for. Stick around till the very end and you'll receive a free indicator exclusively for those who stay with us till the last minute. Let's not waste any more time. Let's dive right in. Just like the original version, the strategy we're introducing today is specifically built for Renko charts, so we'll be using Solar Wave RK. a version fully optimized for Renko-based trading. And don't worry, it comes loaded with all the core features of the original Solar Wave. First, it clearly identifies the current trend direction, whether the market is trending up or down. Then, it provides pullback signals following the trend, helping traders catch solid entries during retracements. One of the standout features is trend strengthening, which notifies you when the trend is gaining momentum, so you can ride the wave as it accelerates. When the market reverses into a downtrend, the colors shift from green to pink, and the indicator switches gears, delivering sell pullback signals and trend strengthening signals for the downside momentum. And of course, Solar Wave RK is still built upon the two core components that define its power. Trend vector, which helps determine the current direction and strength of the trend, and a trailing stop, which dynamically trails price action to protect your profits as the trade moves in your favor. The Solar Wave RK version retains all the core components, including trend vector and trailing stop, both of which play a crucial role in identifying trends and managing risk. However, the key difference lies in how they are calculated. Instead of relying on NINZA ATR, Solar Wave RK is built around tick-based volatility, making it better suited for Renko bars. Specifically, you'll notice two parameters: offset multiplier trend. Offset multiplier stops of 6 So what exactly does this mean? These values aren't just arbitrary numbers. They directly determine how trend positioning and stop placement work on the chart. Here's what they mean. Offset multiplier trend pressures. 30 means that in an uptrend, the highest price of the most recent candle will always be within 30 ticks of the trend vector. In other words, the trend vector acts as a dynamic support level, keeping the price in a safe range to maintain the trend. Offset multiplier. Stop your results over 60 means that in an uptrend, the highest price of the most recent candle will always be within 60 ticks of the trailing stop. This prevents the stop from being placed too close, reducing the risk of getting stopped out prematurely due to minor pullbacks. Thanks to this mechanism, Solar Wave RK adapts seamlessly to Renko bars, allowing you to hold positions more effectively while avoiding unnecessary market noise. A crucial point to note when working with Solar Wave RK is that it uses the highest closing price, not the high price, to determine both the trend vector and the trailing stop. Specifically, offset multiplier trend 30 and offset multiplier stop 60 are based on the highest closing price since the beginning of the uptrend. For instance, if you observe a strong bullish candle and its closing price is the highest since the trend began, that closing price will be used as the reference for both the trend vector and trailing stop. Now, if the trend vector flattens, it means the uptrend might be losing momentum. However, if the price breaks through this highest closing price, the flat phase ends, and we enter a phase of strong upward trend. This is extremely important for breakout traders. When the price breaks through resistance, creating a new highest closing price, it signals a strong continuation of the trend, allowing you to catch the trend early and capitalize on the opportunity. A crucial point to note when working with Solar Wave RK is that it uses the highest closing price, not the high price, to determine both the trend vector and the trailing stop. Specifically, offset multiplier trend 30 and offset multiplier stop 60 are based on the highest closing price since the beginning of the uptrend. For instance, if you observe a strong bullish candle and its closing price is the highest since the trend began, that closing price will be used as the reference for both the trend vector and trailing stop. Now, if the trend vector flattens, it means the uptrend might be losing momentum. However, if the price breaks through this highest closing price, the flat phase ends, and we enter a phase of strong upward trend. This is extremely important for breakout traders. When the price breaks through resistance, creating a new highest closing price, it signals a strong continuation of the trend, allowing you to catch the trend early and capitalize on the opportunity. Next, let's talk about the numbers displayed on Solar Wave RK. These numbers indicate the volatility, specifically how many ticks the price has moved from the last flat phase to the current flat phase. For example, if you see the number 75, it means that price has moved 75 ticks since the most recent flat market phase up to the current one. Likewise, if you see 40, that means there has been a 40-tick move between two flat zones. This feature is incredibly useful for traders, as it helps you measure the strength of a trend cycle, especially when deciding whether to trade a pullback in the direction of the trend. So, how do we actually put these numbers to work in real trading? Well, after a period of flat or sideways price action, if volatility starts picking up, it usually means a trend is kicking in or gaining steam. That's when your trade signals become more reliable, especially if you're trading in the direction of that trend. It also gives you more confidence to hold your positions longer, as long as the momentum stays strong. On the flip side, when those numbers start to fade, it's a sign the trend is losing strength. And once the trend weakens, it's better to avoid new entries and look to lock in profits before the market starts to turn. Take a look at this example. When the numbers keep rising, say from 80 to 90 and then up to 135, that's a strong indication that volatility is climbing and buyers are clearly in control. The trend is gaining momentum. If you're already in a long position, that's the moment you can feel confident holding it. In fact, depending on the setup, you might even consider scaling in because the market's showing strength. But here's the catch. No trend stays strong forever. When that number suddenly drops, say it crashes down to 25, that's a big red flag. It means the buying pressure is fading fast. And when volatility dries up like that, it often signals that the trend is running out of steam. That's when the market becomes vulnerable to a reversal. At that point, instead of hoping the price will keep running, it's smarter to start thinking about exiting. Lock in your gains. Don't let a winning trade turn into a regret just because you held on too long. Next up is something pretty useful: the indicator's ability to detect and signal pullbacks. Now, the pullback signals are split into two modes. Let's talk about the first one. It works in a simple but effective way. As soon as price makes a clear pullback and enters a trade zone, which is the area defined by the trend vector and the trailing stop, the indicator immediately fires a trade suggestion. In other words, when price breaks out, then starts to retrace and dips back into this defined zone, that's your early pullback entry. The system picks it up right as price is entering that sweet spot, not after the move is already halfway done. These signals tend to show up earlier than most traditional tools, giving you a chance to jump in before the market resumes the main trend. Now for mode 2, you can go into the parameters and simply turn off the pullback early option. In this mode, even if price dips into the trade zone between the trend vector and trailing stop, the indicator won't suggest a trade just yet. It waits. And only when price breaks back above the trend vector, confirming that the pullback is likely done, that's when the trade signal is triggered. This approach is a bit more conservative. It helps you filter out some of the weaker signals, especially near the end of a trend, where price might pull back slightly, but then completely reverse direction instead of continuing. So, depending on your trading style, if you prefer early entries and are comfortable managing a bit more risk, you can keep the early option on. But if you want more confirmation and tighter entries, then this second mode might suit you better. And that wraps up what SolarWave RK brings to the table. A solid tool for trend detection and early pullback entries, helping you stay in sync with market momentum. But we're not stopping here. Next, let me introduce you to another indicator that perfectly complements SolarWave RK, and together they form a complete pullback trading strategy. It's called Sumo Pullback. While SolarWave RK gives you early signals during shallow pullbacks, Sumo Pullback is built to spot deeper, stronger pullbacks. The kind of retracements that often lead to explosive trend continuations. So what makes Sumo Pullback special? Why Sumo? Sumo Pullback is definitely an indicator worth watching. It's not just about trade signals. It brings together trend, zone, and signal into a single, compact system. When the indicator's cloud turns completely red, that's a clear sign the market has entered a strong downtrend. At that point, Sumo Pullback automatically switches into sell pullback mode, meaning it waits for a slight retracement back into the cloud before looking for short entries. Now, you might be wondering, where exactly is the trade zone? Well, the cloud itself is the trade zone. It's built from multiple moving averages. But here's the twist. Each MA is individually smoothed using a unique formula. They don't all follow the same preset. This approach makes the cloud super smooth, stable, and much less prone to noise, even when the market gets choppy. Because of that, the cloud in Sumo Pullback becomes more than just a visual zone. It acts as a trend reader, a dynamic trade zone, and a signal engine, all rolled into one. Just by looking at the cloud, you'll know where you are in the trend, where price is likely to react, and whether it's time to step in or stay out. The same logic applies when the market shifts into bullish mode. Once the cloud turns fully green, it signals a solid uptrend is in place. At this point, Sumo Pullback switches into buy pullback. Now, we get to the most valuable part of Sumo Pullback, its signal mechanism. Focus on the cloud. When price is below the cloud acts as a dynamic resistance, meaning sellers tend to step in and push the market lower from that area. But when price breaks above the cloud, it switches roles and becomes a dynamic support zone, a place where buyers might re-enter and hold the trend. Now, here's where things get interesting. Let's say the market is in a downtrend and you see a short-term pullback upward. Price manages to break up into the cloud, maybe even above it, and the cloud starts to narrow. This narrowing hints at momentum. Then present a reversal candle cuts back down through the cloud, slicing through that newly formed support zone. Boom! That's when Sumo fires a sell signal. Why is that signal powerful? Because that candle didn't just reverse, it broke through a dynamic support area made of smoothed MAs, designed to filter noise. In essence, it broke through the last line of defense for the bulls. That's your confirmation. The trend is continuing. Momentum is back on track. And the Sumo signal is real. Now let's flip the situation. When price is sitting above the cloud acts as a dynamic support zone, a buffer where bulls can step in and defend the trend. Sometimes, though, price will break below the cloud, making it look like the trend is collapsing. But here's the twist. If a strong, bullish reversal candle immediately follows and pushes price back above the cloud, closing solidly above the broken support, that's when Sumo fires a buy signal. Why does this signal matter? It shows that sellers couldn't follow through after the initial breakdown. Buyers step back in right at the key support zone. And most importantly, that reversal candle invalidates the false breakdown, taking control of the trend. In this context, Sumo confirms a buy setup because the market just bounced off support and is likely to resume its upward trend. All right, now we're getting to the part you've probably been waiting for the most. How do we actually combine these two powerful indicators into a full trading strategy? Right now, we're going to walk through the full setup process step by step, showing you exactly how to combine Solar Wave RK and Sumo Pullback. Make sure you pay close attention to what we do on screen, because we're not just adjusting the technical parameters of each indicator, we're also setting up the visual layout to make everything clear, clean, and easy to read while you trade. From cloud colors, signal display, to where each indicator sits on your chart. It'll all be optimized so that you can instantly see where the trend is, where the pullback is happening, and when it's time to strike. And this right here is what the final system layout looks like after we've completed the setup. From the color scheme of the cloud to the way signals are displayed on the chart, everything is fine-tuned to make sure that it's easy on the eyes, so you can watch the chart for hours without getting fatigued. It's clear and uncluttered, making each signal easy to spot in real time. And above all, it keeps the chart looking clean and professional, ready for both live trading and backtesting. Now let's dive into one of the most important strengths of this strategy, its ability to confirm the trend with confidence. Both Solar Wave RK and Sumo Pullback are trend-sensitive indicators, which means they can each detect when the market is entering a new uptrend or downtrend. But the real value comes when both indicators align, when they both point in the same direction. This kind of confirmation makes the trend signal far more reliable than if you were using just one of them. Even better, the two indicators can complement each other. Let's say one indicator shows a possible reversal, but the other one still confirms the trend is intact. That tells you the trend may still be strong, and you're probably just seeing a temporary pullback or market noise, not a full reversal yet. So instead of jumping out of a good trade too early, this dual confirmation setup gives you the confidence to stay in your trade or avoid entering too soon against the main trend. Unlike an uptrend, a downtrend is only confirmed when both Solar Wave RK and Sumo Pullback clearly align and start showing bearish conditions. That's when the bigger picture starts to shift. The system no longer favors the buyers, key price levels begin to break, and the market's momentum leans heavily toward the downside. When both indicators speak the same bearish language, it's no longer just a cool down. It's a signal that sellers are now in control, and price is likely to continue its downward path. But if one indicator flips bearish, while the other still holds neutral or bullish, that's a signal of uncertainty, a transitional phase. And the wise move is to stay patient, let the market fully commit before acting. Because when both indicators align, that's when you know the trend has turned, the story has changed, and you're on the right side of the narrative. Now, let's take a look at the live chart to see how this strategy reveals the trend in action. And while we're doing that, let me explain why combining these two indicators results in such strong trend confirmation. It all comes down to how they interpret the market and how different those interpretations are. Solar Wave RK reads trend based on price volatility. It detects when the market is silent and when it starts to break out. Sumo Pullback, on the other hand, uses a dynamic MA structure to spot trend alignment through moving average behavior. Two tools, two perspectives. But when they speak the same trend direction, that's when the signal becomes serious business. Why? Because they cover each other's blind spots. Solar Wave reacts quickly to price explosions, while Sumo Pullback filters out minor noise and stays grounded. That's the edge. When two different algorithms confirm the same trend, your confidence level skyrockets. The noise gets filtered, the fake outs get avoided, and you're left with a cleaner, more trustworthy read on the market. Compare that to using two indicators built on the same logic, like two MAs. When the market shakes a little, they all shake together. You get false confirmations and no real backup, but with this hybrid combo, it's like having two specialists from different fields agreeing on the same call. That's when you know you're aligned with the real move. Now, here's the thing. Not every time the Sumo Pullback gives you a clean signal. Sometimes the market's ripping, but your system stays quiet. And if you just sit there waiting for that perfect setup, chances are you'll miss out, especially during strong trending phases. So what should we do in that situation? That's where you zoom out a little and start paying closer attention to two key dynamic levels. The trend vector from Solar Wave RK and the middle line, or can call I baseline from Sumo Pullback. Think of these as moving support, like resistance zones that adjust in real time with the market. They're like the pulse of the trend, giving you a sense of who's really in control. One powerful scenario to watch for is when you get a strong reversal candle, maybe a pin bar, an engulfing, or even a false breakout that cuts through both the middle line and the trend vector. That's not just some random breakout. It's a sign there's real momentum behind the move, and in many cases, the trend might be getting ready to explode again. Now here's where it gets even more interesting. If price breaks above both levels, then flips back down and reclaims that zone with a reversal candle, that's often a sign sellers are stepping back in with force. And assuming the bigger trend is still intact, that kind of reclaim setup can give you a clean, confident re-entry back into the trend. But let me be clear. Just because price crosses those lines and pulls back doesn't mean it's always a high probability trade. Context matters. You've got to ask, Is the overall trend still strong? Is volume confirming the move? Does this look like real commitment? Or is it just a trap? Because trading isn't about memorizing setups and waiting for checkboxes to light up. It's about reading the tape, understanding who's behind the move, and knowing when to step in with conviction. Now, here's the thing. Not every time the Sumo pullback gives you a clean signal. Sometimes the market's ripping, but your system stays quiet. And if you just sit there waiting for that perfect setup, chances are you'll miss out, especially during strong trending phases. So what should we do in that situation? That's where you zoom out a little and start paying closer attention to two key dynamic levels: the trend vector from Solar Wave RK and the middle line from Sumo Pullback. Think of these as moving support resistance zones that adjust in real time with the market. They're like the pulse of the trend, giving you a sense of who's really in control. One powerful scenario to watch for is when you get a strong reversal candle, maybe a pin bar, an engulfing, or even a false breakout that cuts through both the middle line and the trend vector. That's not just some random breakout. It's a sign there's real momentum behind the move. And in many cases, the trend might be getting ready to explode again. Now here's where it gets even more interesting. If price breaks above both levels, then flips back down and reclaims that zone with a reversal candle, that's often a sign sellers are stepping back in with force. And assuming the bigger trend is still intact, that kind of reclaim setup can give you a clean, confident re-entry back into the trend. But let me be clear. Just because price crosses those lines and pulls back doesn't mean it's always a high probability trade. Context matters. You've got to ask, is the overall trend still strong? Is volume confirming the move? Does this look like real commitment? Or is it just a trap? Because trading isn't about memorizing setups and waiting for checkboxes to light up. It's about reading the tape, understanding who's behind the move, and knowing when to step in with conviction. One more key rule. We do not take the trade if the reversal candle only breaks the trend vector but fails to reach the middle line. Now, if you'd spotted this setup and acted on it, especially right after price broke through the trend vector and middle line and then gave you a solid confirmation candle, you could have caught two high-quality trades within the same trend move. We're talking one trade pulling in 162 ticks and the other one clocking in at over 200 ticks, assuming you held your position with solid trade management. This isn't about luck. This is what happens when you understand price behavior, use your tools properly, and know how to read context. And the real takeaway? You don't need to trade all day. One or two well-timed entries during a strong trend can be more than enough to cover your entire week. Don't enter buy trades when both indicators are not aligned. If a BVI signal appears while Solar Wave RK and Sumo Pullback are pointing in opposite trend directions, we do not enter the trade. For example, Solar Wave RK is detecting a retracement within a downtrend, while Sumo Pullback still shows an ongoing uptrend. In this case, the buy signal loses its reliability. The market trend is unclear, and that move might just be a weak bounce or a bull trap, not a true continuation. Key rule: only take a buy trade when both indicators confirm the same trend direction. No agreement, no trade. It's not worth the risk in noisy zones. At this point, when both indicators confirm the continuation of the downtrend, it signals that sellers are clearly in control. This is when we actively look for sell setups. As you can see on the chart, there are two clear sell signals. The first one is a strong bearish candle that breaks through both the trend vector from Solar Wave RK and the middle line of Sumo Pullback, two key dynamic support levels. This breakout shows that the bears have regained control after a shallow retracement. The second signal is the Sumo Pullback signal, which is triggered when price cuts back down through the cloud from above. A strong sign that the retracement has ended and the downtrend is resuming with momentum. On the flip side, when the market is clearly trending upward, that's the time to shift your focus toward buying into pullbacks trading with the momentum. In these moments, you'll often see Sumo pullback signals show up right around short-term retracements, giving you clean entries that align with the broader trend. But it gets more interesting when a reversal candle doesn't just show up. It also punches through both the trend vector and the middle line. When that happens, the trade becomes more compelling. You're not just reacting to a candle, you're seeing price break through two dynamic support zones, which shows strength from the buyers reclaiming control. And if that very candle also triggers the Sumo pullback signal at the same time it slices through both levels, that's a strong confluence. You've got price action, system confirmation, and technical structure all pointing in the same direction. These are the trades you want to pay attention to. Not because they guarantee profits, but because they offer a higher probability edge in a trending environment. That's the name of the game. Not chasing every move, but knowing when multiple layers of confirmation align when everything clicks. Trade less, but trade with clarity. So with these two signal mechanisms, you now have the flexibility to engage with the market, whether or not a Sumo pullback signal is present. When you get a clean Sumo pullback trigger, that's your system telling you it's time. But even if that signal hasn't fired yet, if price just pushed through both the trend vector and the middle line with a strong reversal candle, that's a moment you can still consider getting involved. Because price action is validating the move in real time. This flexibility is key in live trading, especially in fast-moving markets where system signals might come late or get missed entirely. By combining system-based confirmation with price behavior like a strong breakthrough dynamic zones, you open up more ways to participate without stepping outside your rules. And if you happen to miss the first 1-2 entries, that's okay, you're not out of the game. You can still rejoin on the next impulse, as long as you understand the structure. This takes a lot of pressure off your shoulders, which is especially important for scalpers who rely on fast decision-making and multiple trade opportunities in short windows. Hey everyone, before we jump into the next part of the webinar, can I please have just 30 seconds of your time? We've got a crazy good deal going on right now. The full Saber-Tooth Tiger trading bundle, originally $2,184, is now just $636. And if that's not enough, you can also get 50% off any one of the 4 products using the code SABER. Just scan the QR code right here to check it out. And one more thing. If you stay with us until the very end of the webinar, you'll get an exclusive trading indicator 100% free, only for those who stick around. So please don't miss it. I promise it's worth it. Right, and when we look deeper into this strategy, we see that it doesn't just give us a strong trend, clear trading zones, or clean signals. It also gives us insight into market momentum. That momentum tells us when the market is picking up strength, not just where to enter, but when it's safe to stay in. And based on that, you can trail your stop more confidently, in sync with how the market is actually moving, instead of shifting it too early or based on emotion. This strategy helps you not only find good entries, but also manage your risk in a smarter, momentum-based way. When an uptrend starts to develop, you'll notice that the trailing stop line from Solar Wave RK begins to push into the Sumo pullback cloud. This is a key sign that bullish momentum is picking up and that buying pressure is starting to dominate the market. Usually when this happens, the market tends to continue moving strongly to the upside as it reflects growing strength and aggressive buying activity. On the flip side, when a downtrend starts to take shape, you'll see the trailing stop line from Solar Wave RK begin to push downward and cut through the Sumo pullback cloud. This signals that selling pressure is picking up and the market is shifting into a weaker, more bearish phase. Usually, when this happens, the market tends to continue dropping strongly as sellers gain control and sentiment begins to turn more negative. All right, now let's take a look at a demo trade example, so we can see exactly how everything comes together when we apply the full checklist from this strategy in real market action. On the flip side, when a downtrend starts to take shape, you'll see the trailing stop line from Solar Wave RK begin to push downward and cut through the Sumo pullback cloud. This signals that selling pressure is picking up and the market is shifting into a weaker, more bearish phase. Usually, when this happens, the market tends to continue dropping strongly as sellers gain control and sentiment begins to turn more negative. At this point, you can see that price is broken below both the trend vector and the middle line. This is the setup where we'll trigger a buy-up trade. EOB ordering will instantly place a buy order as soon as a bullish reversal candle appears. And for that candle to qualify, it must break back up through both the trend vector and the middle line. Once that condition is met, the buy will be executed. The stop loss will be placed at the trailing stop line, allowing risk to be managed in line with the trend strength. Next, we notice that price breaks below the lower cloud of the Sumo pullback, signaling a momentary imbalance in the market where sellers are taking control. However, right after that, price sharply reverses and forms a strong, bullish reversal candle, piercing back up through the cloud from below. At this point, once the bullish candle closes above the cloud, the Sumo pullback issues a buy signal. This is when we trigger a buy-up trade, meaning we enter the trade as soon as that bullish candle closes, confirming that buyers have regained momentum. Right after the candle closes and the Sumo pullback signal appears, we execute the buy order immediately. The stop loss is placed at the trailing stop line, allowing us to manage risk effectively while still aligning with the ongoing trend. At this point, as you can see, the trailing stop starts to move inside the Sumo pullback cloud. That's a strong indication that the uptrend is gaining momentum. When this happens, we'll adjust our stop loss upward to lock in profits and protect ourselves in case of a sudden reversal. In fast-moving markets, trends can accelerate and then snap back quickly. So trailing your stop closely is key to staying in control and avoiding unexpected drawdowns. At this point, I've automatically adjusted the stop loss using the built-in trailing stop feature in NinjaTrader 8 and T8. We've already covered this setup thoroughly in previous videos, so if you followed along, you probably know how it works. If you're not familiar with it yet, feel free to reach out to us at support@ninza.co for help. Or even easier, just drop us your email and we'll guide you step by step through the process. And just like that, even though price didn't fully reach our initial target, we still secured a profitable trade by actively trailing the stop along with the trend. This shows that when you stick to the strategy and manage the trade properly, you can lock in profits without needing the market to hit your full target, and at the same time, protect yourself from unnecessary risk. Next, a buy signal appears, but this time it's against the direction shown by one of the two indicators. In this case, we don't take the buy trade because the signal is not aligned with the overall trend. This kind of filter helps us avoid low probability setups and stay disciplined with the strategy by only trading when the trend and the signal are in agreement. In the same way, when price breaks above the Sumo pullback cloud, we enter a potential trap zone where traders often hesitate, unsure if this is a true continuation or just a fake out designed to catch breakout buyers off guard. In this situation, we don't wait for confirmation before reacting. Instead, we set up a preemptive execution plan based on our system rules. If after the breakout, a bearish reversal candle forms and cuts back down through the cloud, that would confirm a sell signal from Sumo pullback, showing that sellers are regaining control and the downtrend may resume. But here's the key. We don't wait for that signal to fully form before taking action. Instead, we activate a sell down order using the EOB ordering tool in advance. This way, as soon as a red reversal candle that meets the Sumo pullback conditions closes, the system will automatically execute a sell order instantly. This approach ensures you don't miss the setup and helps you maintain accuracy and timing, especially in fast-moving market conditions. By preparing in advance, you gain a strategic edge in catching reliable reversals without reacting late or second-guessing your system. Now let's talk about the real power of trailing your stop based on market momentum, something that can significantly boost your profits during strong trends. A lot of traders exit too early, afraid of giving back profits, or simply don't know where to trail the stop safely. But when you combine the Sumo pullback cloud with the trailing stop from Solar Wave RK, you can secure your trades without killing the trade too early. Here's the key. You don't have to guess where the top is. When the market is trending strong, let it run. You simply trail your stop only when momentum starts to fade. And you can clearly see that when the trailing stop line begins to enter the Sumo pullback cloud. In the next example, I'll show you how I manage such a trade. Once the trailing stop starts pushing into the cloud, I will activate automatic trailing using NT8's built-in function, letting the system move my stop in real time based on the market's strength. This way, you allow the trend to develop fully while still protecting profits logically. In a strong move, one good trade like this could generate the same return as 3 or 4 average wins combined. So, if you learn how to trail stops properly using this setup, you won't need to overtrade or worry about missing entries. Instead, you'll let the market reward your patience and precision. Let's take a look at a real trade where we automatically trail the stop as the trailing plot enters the Sumo pullback cloud, and see how this simple move gives us a clear edge in both profit taking and risk control. And just like with a buy setup, when you're in a sell position, you can apply the exact same logic to manage your trade. Let the trailing stop follow the market's momentum instead of exiting too early. This allows you to stay in strong downtrends longer and maximize your profit potential without second-guessing every bounce. As long as the trailing stop holds, your sell trade remains safe and efficient. And you only exit when there's a real shift in momentum, not just noise. This is one of the core strengths of this strategy. It's not just about entry, it's about intelligent, dynamic trade management that flows with the market. Next, here's a practical tip I want to share when trading this strategy, one that can give you a real edge. Use momentum reversals of solar wave RK as re-entry opportunities. As you've probably noticed, Sumo pullback represents the broader trend. It's slower to change and reflects the bigger picture. On the other hand, solar wave RK reacts to short-term pullbacks, catching those mini corrections within the larger trend. So what does this mean? When we're in a confirmed uptrend by Sumo pullback and solar wave RK pulls back temporarily, but then flips back in the same direction, that's your signal. You can confidently enter a buy trade right as solar wave RK aligns again with the main trend. This setup gives us 3 solid checklists before we pull the trigger. Primary trend confirmed by Sumo pullback. A short pullback detected by solar wave RK. Confirmation of trend continuation when solar wave RK flips back in the same direction. At this point, just wait for a reversal candle and boom! That's your entry. And of course, your stop loss will be placed right at the trailing stop, keeping you safe while giving your trade room to breathe and ride the trend. Likewise, when solar wave RK flips from bullish to bearish, but the bigger trend, confirmed by Sumo pullback, is still intact, all we need to do is wait for solar wave RK to flip back up in sync with the main trend. That's our green light to enter a buy trade. This is how you ride the pullbacks without trying to catch the bottom. You're entering with solid confirmation and staying on the side of strength. And at that moment, you'll also notice the trailing stop starts pushing into the Sumo pullback cloud, a strong sign that bullish momentum is coming back. This is when you set your stop loss to trail automatically along the trailing stop line, helping you lock in profits while reducing risk, so you don't get caught off guard by any sudden reversals. Just like in an uptrend, when you're in a downtrend, Sumo pullback still serves as your long-term trend anchor, while solar wave RK highlights the pullbacks within that larger move. In a typical downtrend, you'll often see solar wave RK temporarily flip to bullish, giving a false sense that the trend is over. But in reality, these are often just breathers, short pauses before the market continues dropping. And that's exactly where the opportunity lies. What we do here is simple but powerful. Wait for solar wave RK to align back with Sumo pullback's downtrend, and that's your cue to execute a sell trade. This signal tends to be more reliable because it filters out noise from temporary pullbacks. But here's the key point. Don't overtrade this setup. As the trend progresses, especially near the end, signals tend to weaken, and the market might flatten out or reverse. That's why I recommend you to limit yourself to just 1 to 2 high-quality pullback entries, and only when you clearly see price aligning again with the main downtrend. And of course, always let your stop trail smartly with the market, especially in late trend conditions where a sharp reversal can come out of nowhere.
Hey trader, join Hello Win Forum and get a free indicator today. Connect with fellow traders, share experiences, and find the right tools for your trading journey. Click the link below for more details at Hello Win Forum. We value your voice and encourage members to support each other by sharing experiences and insights. From trading tour, trading strategy to the showcase tag, explore insights and articles from serious traders, including the ninza.co trading team. If you have any questions or need support, we're always here to help. ninza.co regularly hosts webinars on trading strategies, tackling traders' challenges, and providing solutions. Check the webinar tag for our schedule and replays. Exciting news! We're giving you a $300 voucher just for joining Hello Win Forum. It's simple. Just comment Hello Win under this post, and our ninza.co customer care team will reach out to you right away. Join Hello Win Forum today and be part of building a healthy, constructive community where serious, like-minded traders can connect, share insights, and grow together.
All right, so we've just wrapped up our tour of Solar Wave RK and Sumo Pullback. Two indicators that, when combined, become a momentum pullback strategy with serious punch. Honestly, it's like peanut butter and jelly. But for traders, and now, the moment we've all been waiting for. Drumroll, please. We're dropping a deal so good it might make your broker jealous. Right now, you can grab the entire Saber-Tooth Tiger trading bundle, which is usually $2,184, for only $636. Yes, you heard that right. That's $1,748 you get to keep for snacks, charts, or more caffeine. And if you use the code SABER, you get an extra 50% off on any one of the 4 products. Just scan the QR code like a true ninja and go get it. But wait, we're not done yet. Stick around till the end of the webinar, and you'll get a free exclusive trading indicator. A little gift from us to say thanks for hanging out and not falling asleep. Oh, and one last cool thing. Oh, and before we wrap things up, we've got a free gift for you today. Not just any gift, but a 296er premium indicator. And it's yours completely free just for sticking around. Say hello to RMA Pro. It stands for Range Momentum Average, but honestly, we like to think of it as really magical assistance. So what does RMA Pro do? Unlike standard MAs, RMA Pro applies a unique smoothing technique by incorporating the previous price data rather than recalculating the average from scratch. This method creates a moving average that responds to price changes more quickly than an SMA while maintaining a more gradual reaction than an EMA, helping you navigate trends without being disrupted by abrupt market fluctuations. Enhanced with our signature smoothing and filter features, RMA Pro takes it a step further, producing a cleaner, more stable trend line compared to conventional RMA calculations. Whether you're tracking momentum shifts or refining trade entries, RMA Pro helps smooth out fluctuations while keeping market movements in focus. We've also just launched a brand new indicator called Super Jump Boost, and it's something we're truly proud of. This tool is designed to help you target reward-to-risk ratios as high as 10.1, giving you the edge you need in today's markets. If that sounds exciting, and we think it should, feel free to reach out to our team at ninza.co for more details. We'd be happy to show you how it works and how it can fit into your trading system. Don't worry, we're not disappearing just yet. Our team is still here and ready to answer any questions you may have. If you're feeling shy, just drop your email and we'll reach out to you personally. Once again, thank you so much for joining us today. We truly appreciate your time and energy, and we hope you got real value out of this session. Wishing you a wonderful weekend filled with happiness, good vibes, and quality time with your loved ones. Take care, and we'll see you again in our next webinar.